Welcome back, traders and investors. We have Joe Fahmy on the line, and he is a director at Zor Capital. 17 years of trading experience during which he developed his investment strategy. He's worked at a New York boutique research firm where he gained extensive knowledge of technical analysis, market forecasting, and risk management. Joe, how you doing today?
I'm doing great. Thanks for having me.
Oh, glad to have you on. So you've developed your own investment strategy, and is this what's it for? Primarily stocks, futures, options? What do you like to trade?
Mostly stocks, U.S. equities.
Okay, and is it based on all technicals, or do you throw a little bit of fundamental analysis in there?
It's a combination of the two. It's mainly looking for growth companies with strong earnings and an overlay of technicals as far as using charts to help with entries and exit points.
And so, how would you describe a growth company? I mean, because there's a lot of different companies growing at different sizes, different sectors. What's your strict criteria for a growth stock?
Traditionally, we're looking for companies that are growing their earnings and sales at least 20 or 30% year over year. So it's not a value strategy. It's companies that are more emerging, and those tend to be in the smaller to mid cap. I mean, there are also some large cap companies as well that are growing as well, but it's mostly smaller emerging companies that are really accelerating their earnings and sales growth.
And many times when you're looking for growth companies, you kind of have to ignore that some of these companies get at pretty high PEs. How do you filter that out?
Yeah, that's a great question. Traditionally, PE, I think it's just an overrated tool for valuing companies. Traditionally, the studies have shown that price to earnings, a lot of the emerging growth companies trade at much higher PE, sometimes 1.5 or 2 times the market PE, because I believe you get what you pay for. So the market is willing to pay up for growth.
And with all these new IPOs coming out, do you do a lot of homework on the IPOs? We have a trader Ace in the chat room that loves to play with those things. Do you do a lot of research before they come to the street and then make a prediction, or are you more like my partner Dennis and I? We just when these IPOs come out, we kind of wait for it to trade and for the dust to settle before we get dirty.
Yeah, exactly the latter that you said. I don't really get into the hype on the first couple days, or even I'd like to let it settle out, and that's where the technical part comes in. Give it time to do some research, and then wait for usually like an IPO base where it's just going to settle out technically to get an idea of a good entry point for it. So that way you're not chasing the hype on the first day.
Okay, and so you have extensive knowledge of technical analysis. How did you learn about technical analysis, and if you have some books or some traders to follow, please add that as well.
Yeah, I mean, I have a recommended reading list on my site. I think some of the Jesse Livermore books, how to trade in stocks, as well as William O'Neill's How to Make Money in Stocks. I think those are two of the top books, especially in the O'Neill book. There's a lot of charts in the first 100 pages of historical big winners over the last 100 years. And as they say, history doesn't always repeat itself, but it tends to rhyme a lot in the stock market. So I think by studying the past and studying past big winners, it can help you to identify potential future big winners. So those are two of the books that for beginner traders as well as for advanced traders, I mean, I go through them all the time just because there's so much information. You need to go through them, just repetition to absorb a lot of the information.
And are you like a bar chart guy, a candlestick? What kind of time frames also do you like to look at?
I like to look at the overall picture. I like to look at weekly charts as well as daily charts. Mostly a bar chart, open, high, low, close. I don't use candlesticks. But I like to use more and more. I'm realizing how important it is to use weekly charts in looking at the overall picture. That way, you kind of tend to shut out some of the noise on the shorter term time frames.
And are there any specific technical analysis techniques that you use?
Um, What do you mean as far as, I
You know,
mean,
some people are moving averages. Some Dennis and I are double tops, triple, double and
yeah.
yeah, double and triple tops, double and triple bottoms, consolidations at the closing prices, things like that.
Yeah, that's a great question. Yeah, I'm looking for usually for stocks emerging from sound bases. So it could be double bottom bases, could be cup and handle bases, but usually it's a stock that has coming out of a good, healthy consolidation where you can use the volume on the weekly charts to see that the institutions are supporting. Because at the end of the day, I want stocks, it's a lot of price and volume, but I want stocks that are showing institutional support. So, for example, I mean, if I buy 100 shares, you buy 10,000 shares, that's really not going to move the stock. It's the big pension funds and mutual funds and hedge funds that are buying hundreds of thousands, if not millions of shares. Those are the guys at the end of the day that are going to support the stock and launch it higher. So that's really what I want to use is stocks coming out of sound technical bases with showing some great institutional support volume-wise.
And do you have any examples of stocks like that we can show our listeners?
I mean, I've talked a little bit. I mean, some of these have run a little bit, but I like some of the big cap biotech names. A stock like Biogen, BIIB, for example. Coming out of a good base, great earnings and sales growth. Big institutional support. They're going to do. They did $9 last year in earnings, 13 coming up this year. I mean, they've been growing their earnings and sales 30, 40, 50%. So that's an example of a stock that has very strong institutional support, very strong earnings and sales growth, big pipeline of products, as well as combining a technical base that it can hopefully emerge out of this 350 range, and go higher. So that would be an example. Yeah.
You're not tempted to take profits in anything like this? I mean, it's had a tremendous run here from 320. How do you protect your profits? Or are you like Warren Buffett? You never sell.
Oh, no, no. My average holding period can be a few days to a few months. So
Okay.
I'm a swing trader, but I'm trying to start with a sound group of stocks. So I think where a lot of people fail right off the bat is they're just trading nothing to write home about stocks. I'm looking for companies with explosive growth. So my pool of stocks is always going to be a sound group of stocks, and I will trade these. That's where bringing your point up of the moving averages, where as long as they're holding the proper moving averages, I'll try to stick with these as long as I can. But no, I'm not in that never sell category at all. No, because if it turns against me and breaks down below support, then I'll stop myself out.
If you're in a stock and it's a growth stock and you're doing well in it and it's showing you nice profits, and then the growth starts to taper off a little bit,
Yeah.
do you ever exit the position? Or, well, first of all, what's your criteria for when a growth stock is not growing anymore, or at least flattening out? Do you give it a couple quarters, a year? What's your criteria?
Yeah, I mean, you want to see usually a couple quarters of solid growth, but if it does start to slow, I think it'll show up in the technicals. There are also times where stocks will make great runs and the story is great, but I just will take a profit when it reaches a target. If it breaks out of a base, a lot of these stocks will run on average 20%, sometimes 15, 25 in that range. So there's nothing wrong with that initial move out of a base to lock in some profits at those levels, even if the story's still intact, just to take some profits off the table.
And will you short stocks?
Yes, I will short stocks. I think shorting is very challenging. I think it's very difficult, and a lot of people I know, struggle with it. But I would wait for a bear market or some sort of correction or some sort of breakdown in the market, because right now I'm more focused on buying stocks on support. So I'm not against shorting. I'm just against shorting in a bull market. I think shorting is challenging enough as it is, but doing it in a bull market is just suicide. It's just too much. It's too much aggravation.
And what do you think about the market at these levels here? I mean, basically a 100-point straight up move in the S&Ps. We hit 1890 at the beginning of August, and now coming into the holiday, we're challenging 2,000 here. Are you looking for just a continuation above 2,000 and beyond, or do we come a little bit too far too fast?
Well, the market, I've wrote about this on my blog. The market does these patterns where it starts to look like it's breaking down. And because whether people are nervous or people are, have 2008, 2009 still in the back of their mind, or whether they think the Fed is the reason for this, and whatever the reason is, people have, I've noticed, have one foot out the door with this market on any little pullback. And then everyone gets very, very cautious and bearish very quickly, and then the market stabilizes and does exactly what it just did. It goes on these 10 to 20 day nonstop grinds up. It doesn't stop grinding up. Now it all depends on your time frame. I think that the market still has a lot of upside left over the next 6 to 18 months. I mainly use the NASDAQ composite because I think it's the leading index, and I said on my blog I think the NASDAQ gets to the old 2000 highs over the next 6 to 18 months, but I'm also not stupid where it's not going to go straight up. There will be nasty shakeouts, corrections, just as we've seen maybe 6 or 10 times over the last 2 years, where some sort of event will trigger a pullback in the market, shakes out the weak hands, at least digesting some of the gains before we head higher. So, my overall feeling is the market's going to go higher over the next 6 to 18 months, but there will be, of course, shakeouts and corrections along the way.
Okay, one final question for you. Let's say, someone's, a younger person, younger than us, in their early, mid-20s or whatever, and they just inherited $100,000, and they wanted to put it in the market right away. What advice would you have for that person?
I'd say invest with Zor Capital. That's what I would tell them.
There we go. Bum, bum,
No,
bum,
I'm
bum.
kidding. I think that people should take the time to, if you don't have, one thing I want to make a point is it really takes time and effort to do this. I'm learning every single day, and I've been trading for 18 years. So if you have the time to put in, I think individuals can research solid companies and put a little bit into a group of solid companies, like some energy, some biotech, some tech, some staples, something like that, and diversify. If you don't have the time, you're better off just throwing it in an index. It just really depends, to answer your question, if that person has the time and wants to put the time to research and evaluate investing, or if they don't, you're better off just putting it in an index and just adding to it on a regular basis.
Excellent answer there. Joe Fahmy, director at Zor Capital, coming here on Benzinga's pre-market prep, brought to you by Options House. Thanks a lot, Joe. Good information, and we hope to have you on again soon.
Hey, thanks so much for having me. I really enjoyed it. Thank you.